Hello and welcome back to another edition of What's Moving in the Forex Market, brought to you by myself, Kurt Capra, and Pristine Trading. Please keep in mind that all comments are for educational purposes only and should not be construed as investment advice. And as always, make sure you're checking out pristine.com for a full schedule of webinars. This week we have a couple for you, starting with Monday, February 1st at 4:15. Learn how you can squeeze more profit from smaller moves, along with another one at 5:15, becoming a versatile trader and why it's no longer an option. And then we have a very special webinar on Thursday, February 4th, a fireside chat with President and CEO of Pristine, Greg Capper. So, again, hopefully you can join us for any one of these that we've got upcoming, or, as I said, check out www.pristine.com for our full schedule and listing of upcoming webinars. Taking a look at the Forex market, we're looking in the upper left here at Euro US dollar, and it continues to be range bound. As you can see here, it's just going sideways. The moving averages are intersecting an overlapping price, which is a real good indication that nothing exciting from a trend point of view is taking place. So the best thing you can do here with regard to Euro US dollar is look to play the range on an intraday basis. But until we get some kind of breakout or breakdown, there really is no strong directional bias here. To the extent that we can develop a directional bias, we would have to refer to the weekly, which, as you can see, is in a downtrend here. And so we'll see if we do get some follow through lower. But at this point, based on the weekly, I tend to lean a little more bearishly, but at the same time, this daily just going sideways has me playing the range, if anything. Moving on over to Aussie dollar, US dollar, you can see this one also trying to retrace a little bit. And as we discussed in last week's video, we have moved into a little bit of resistance. So you could see the reaction, the initial reaction to that. But at the same time, now being above these moving averages, there is some newfound demand that's been coming in as well. So another scenario, another environment where things are kind of confused and not real sure which way they want to go overall. Weekly time frames are weak, they're bearish, so you want to kind of default to that overall, but at the same time you're going to play the intraday trends. So no real strong swing bias here. Really, again, just looking to play the intraday volatility. And the same thing with New Zealand dollar, US dollar here in the upper right. You can see this one's just been going sideways here in a rather tight consolidation. But until it can break out or break down, we're really not going to get any compelling type of movement either way. So if you can find some unique opportunity, some clean opportunity, you could look to take advantage of that. But really, there isn't a whole lot being offered to us at this moment. That being said, if we can break out or break down, I definitely see that changing. So it is a pair that we want to pay close attention to. In the bottom right, we've got US dollar yen, and as you can see, we had this explosive move higher when Bank of Japan came out announcing negative interest rates, and so that certainly spiked the dollar higher against the yen, and you can see the resulting action of that. Very strong candle into resistance. And at this point, we'll see. I mean, this could be setting up for follow through this week. Right? Getting this attempt to move lower, starting the week off. If it can come back up, if buyers recover this here, and we ultimately begin to break over these highs, we could be looking at a move back up towards the 123.67-ish area. So there is still some upside potential here, as we'll see if we get follow through to Friday's wide range candle. If not, if it doesn't hold, well, believe it or not, we could completely collapse here and fall all the way back down. So that's going to be something to watch for, keying on those intraday levels of support to see if they can hold. If not, like I said, down we'll go. Moving on over to US dollar, Canadian dollar. This one, as we discussed last week, has pulled back here finally, given the the relief rally in oil, and it is now into support, so you can see these buyers stepping up, but at the same time, we do have some overhead resistance, so it could be a period of a bit more volatility, some more wild swings taking place. You're not going to see the same kind of trending action that you were seeing in the weeks leading up to this recent pullback. So still look for buyers to step up at support, but at the same time, look for sellers to get a little more aggressive at resistance and play the range, right? Play in the middle of the range, take what you can get, and move on. Don't get married to any bias. And finally, pound US dollar here, as we discussed, has fallen quite a bit and really just going sideways here now. If it can break out, maybe it gets a little bit more demand, but I would have to believe that given the weekly chart, given this daily trend, any attempt to move up to higher levels of resistance is going to get sold into. So if it does break out, like I said, you could look to play that intraday strength, but at the same time, as you start seeing momentum slowing and supply increasing, that would be the signal to look at reversing and getting short for what could be a much more substantial move lower. So that is where things are at as we head into this new week, first week of February. So as always, stay patient, stay disciplined, and stay confident. We'll see you in the next video. And as always, make sure to comment, like, and subscribe so that you can continue to receive future updates on any videos that we release. Until next time, take care, and we'll talk to you again soon.